You might have heard of a very interesting anecdote about Warren Buffett, and the anecdote is that basically Warren Buffett pays less tax than his secretary. Now his secretary actually pays personal income tax, which is at a higher bracket, and Warren Buffett mostly pays taxes on wealth gain or capital gains tax, which are taxed at a much lower rate. So therefore, Warren Buffett pays less tax than his secretary. Now this looks very, very wrong, but this is what the agenda of this video is, that I'm going to take you through 5 key things or 5 key habits that rich people have that allows them to become rich and that allows them to stay rich. So please stay tuned till the end of the video, because I'm going to talk about some of the strategies that you yourself can use to become rich and stay rich. So the first key habit or the first key thing that rich people do is that they own nothing, but they control everything. So this is actually a quote by Rockefeller, who was one of the prominent billionaires. So this quote essentially means that rich people personally do not own anything, but they control everything. For example, let me give a couple of examples that you can relate to. So when you and I get our salary, there is something called as TDS, tax deducted at source, which the company cuts, and then we get the salary. So for example, if we are getting a salary of 1 lakh, then the TDS cut would be 10% by the company, and we will only receive 90,000 in our bank account. So this would have happened to everyone, agree? So now rich people do not own salaries. They are not owning any salary, but they are controlling the organization that gives out the salaries, right? So this is example 1. You might have also heard that Jeff Bezos, some years, he pays literally 0% tax. How is that possible? I'll make a separate video. Do let me know in the comments if you want to understand the mechanics behind it. But the overarching viewpoint here is that Jeff Bezos actually controls Amazon. So the profit, so if the company is growing from let's say $10 billion to $20 billion, there is a wealth gain. So up until the point Jeff Bezos decides to sell the shares of Amazon, he will not be taxed. And even when he's taxed, the tax rate is lower. So essentially, rich people tend to control things. They do not need to own things. Same goes with company cars. I am quite sure that these rich people, they actually control company cars. They do not buy cars under their own personal name. So this is a very critical habit that rich people cultivate, that they literally do not own much under their own personal names, but they control most of the things. If you're a salaried employee, then hardly there is any maneuvering room here. But there is a small tip that I can give you. So essentially, if you actually register your company under proprietorship in Shop Act, then you become a proprietor in a small business. Now, if you're earning any side incomes, especially online, then you can take money in this proprietor account and you'll have to pay lower taxes for online businesses. Now, of course, the tax adjustments are different for different companies. So please consult your tax consultant on this. But this is one of the key things that rich people do. This is one of the ways in which you can save money. So if you are having a side income or a side gig, or if you're doing some external consulting projects, don't take that money under your own personal account. Create a company via Shop Act. It's very easy to do it. It just takes a few days to register your company. Take that money in that account, and then depending on what the nature of the exact business is, your tax might come out to be lower. So that's a great way of saving taxes legally in India. So if you like that tip, please press the like button. That would mean a lot. The second key habit that rich people have is that they spend very less money. Now there are 2 specific points that I would want to cover here. So according to one of the studies that was done by Mr. Money Mustache, and he has covered a financial blog on this, he categorically says that, hey, if you are targeting early retirement and if you save 70% or more of your salary, and if you continue to do that for the next 10 years of your life, you can retire with the same standard of living. Yes, this accounts for inflation. This accounts for a bunch of different things, not emergency expenses, of course, but it can be a good roadmap for you to estimate how much salary you need to save. So please keep this in mind. I think Warren Buffett has summed it very, very aptly. He said that, hey, if you buy things that you do not need, then you will have to sell things that you actually need. So be very frugal with your expenses. Invest in good things, for example, a course, mentor, etc. But don't unnecessarily undertake expenses. So I've made a video on 6 things that I do not buy as a millionaire, and you can check the link somewhere here. Now, just building on this theory of spending, I think we need to look deeper into the case and one of the anecdotes of Mr. Warren Buffett. He's an idol for many of us, but I think he should become an idol for us in terms of spending too. Now, here is how the anecdote goes. So Mr. Warren Buffett lives in a 5-bedroom house in Omaha, Nebraska, and every day from his house, he goes to his office. And along the way, there is a McDonald's, right, where he has breakfast. So every morning, his wife puts the change in his car cup, and she puts in $2.50, $3.17, and different variants. There are 2 or 3 variants that his wife puts, right? Now, if the market is up, then Warren Buffett goes and indulges. So he goes and buys $3.17 breakfast. But if the market is down that day, then Warren Buffett would buy the medium category, $2.50 burger. So that is for a billionaire. Now you might call him that, what's the point of earning billions? He's thinking like so much in just spending $1. No, it is actually a habit. And the habit is that you get accustomed to taking discretionary spend. So if you get into bad habits, you would not even realize when you are spending money unnecessarily. Let me give you an example. For example, so back in around 2012, 2013, I used to have a cell phone of not more than 10,000 rupees. That was a rule that I had made for myself. But when I went to INSEAD, I bought a slightly more expensive cell phone, right? It went on to 15,000. Then after I graduated from INSEAD, I started making more money. Then my expense on cell phone went up. It skyrocketed, right? So the point I'm trying to tell you is that sometimes you do not even realize how habitual you get in terms of buying a certain category of cell phone. If you buy a 30,000 cell phone, tell me, and please tell me in the comments that next time, how much money cell phone would you buy? I can guarantee you that majority of the answers would say that, hey, if I bought a 30,000 rupee cell phone and if I have to replace it after 5 years, I would at least buy a 35,000 rupee cell phone. So the point I want to make is that rich people are very frugal in terms of the way that they spend. Majority of the good rich people. If you start talking about Vijay Mallya or Dan Bilzerian or Sahil Khan, etc., I'm not talking about those rich people. I'm talking about a large subsegment of billionaires who are super frugal in terms of their spend. The principle that these rich investors follow is that, hey, if we spend less, we will have more money to invest. So they take that money and invest it, not only for them, but for their future generations as well, right? So that is called as intergenerational investing. Now, third point that rich people generally tend to follow is that they tend to invest heavily, right? They do not rely on one single source of income. They rather rely on investment. The returns that their investments generate, they invest even that. Right? And the returns that those investments also generate, they invest even that, right? Whatever little is left at the end after 2-3 rounds of iterations, that's the money that they end up spending. So if you ask any rich person that, hey, how much percentage of money do you save of your salary? The usual answer would be 90-95%. Now, why is there so much stress on investing? Why do I keep telling you that, hey, you must learn how to invest? Very simple reason that investment, number one, is something that all of us need to undertake, right? Because all of us are making money. We might be making 10,000 or we might be making 1 lakh rupees a month. All of us are making money and that money needs to be invested somewhere, right? Or you will just simply spend it, right? Now, if you are in the habit of putting your money in just FD and hoping it to grow, bad idea, it will not grow. Therefore, you must learn how to invest and give your money to mutual fund managers, etc., so that they can invest on your behalf. But a better scenario is that learn to invest your own money. At the very least, you must at least know how to track where your money is getting invested, right? So don't trust mutual fund managers blindly. Again, I will link one of my videos that I had made on mutual fund investments. Please go and watch it. That will give you an assessment of how active mutual funds are poorly managed sometimes, and it can lead to a lot of wealth loss for you. Now, one key habit that I personally have developed in terms of investing is that I try to create a barrier between me and my investments. For example, I have bought a lot of commercial properties. So that money is invested, right? So now it's so far off, it's not sitting in my bank account. Now I have an incentive to earn because I see my bank account to be depleted, right? So I have to go and earn more. That gives me more incentive to earn. So creating this barrier between you and your investments is a very good strategy that keeps you motivated. Another strategy could be, you might say that, hey, Akshat, you know what, we don't want to invest in commercial real estate. You can go create a long-term separate trading account on Zerodha. I'll put the link in the description. You can go open up your account, create a long-term account and start investing money in that and just don't check it, right? So invest a little bit of money every month from your salary. If you get a salary of 50,000, take 15,000, put it for long-term investment. Don't even look at it for the next 10 years, right? In good stocks, but, right? So if you're doing that, you will be surprised with the amount of money that you will make and the incentive that you will have to earn more money through your hard work. If you like this step, please press the like button. That would mean a lot to me. Fourth thing that rich people are really good at is that they know when to use debt and how to use debt. So let me give you a couple of examples here. So normal people, what do? If they have to buy a car, they will go to a bank, take a loan, pay an EMI. So EMI creates something called as negative cash flow. So every month you're creating a negative cash flow for yourself. On a 10 lakh rupee loan, you have to pay 25,000 at EMI. So this money creates a negative cash flow for you, right? It's a bad thing. You're buying a depreciating asset and you're using debt very incorrectly. So rich people, what they do is that they learn to use debt very intelligently. For example, if Mukesh Ambani is trying to buy a company, then he would take on debt to buy and acquire that company because probably it might be bankrupt. He might be expecting that new company with his management to grow at 10% and he's getting the debt at 5%. So it's a win for him, right? So he's investing in a growth asset. So he's using debt intelligently. Now you might ask that, Akshat, I don't have money to buy like big companies. How can I use debt intelligently? So you can use debt intelligently by using debt on good things. For example, if you're taking educational loan, fine. Why? Because, for example, let's say if you're doing an MBA from IIM Ahmedabad or from INSEAD, and if you've taken debt, it is okay to take it. Why? Because that degree is going to help you. You become the investment there. You grow with that degree. You have that IIM Ahmedabad, INSEAD, Wharton, Harvard tag on yourself, and you can grow in your career subsequently. If every year that investment helps you earn 5 lakh rupees more, then you would have broken even very quickly, and that's an intelligent way of using debt for yourself. Now, fifth and final point is that rich people know how to take smart risk really, really well. They have developed and cultivated that business sense, how to assess risk, how to hedge risk, how to invest in risk, and they make money from it. So let me give you a couple of examples. For example, Elon Musk sold one of his companies. You can name it in the comment section which company I'm speaking about. So he sold one of his companies. Whatever money he made in millions by selling his company. Whatever money he made from that deal, he put that on his next company. So name which two companies I'm talking about. But the lesson here is very simple that, hey, rich people, they do not get satisfied by earning like 30 million, 40 million, 50 million. They know how to do risk assessment, right? So Elon Musk knew that, hey, you know what, if I pick all my money and invest it in company B, I'm taking a calculated risk, I can make it successful, and he did it, right? Now the entire community worships Elon Musk. On the flip side, now here comes example 2. If general audiences were to assess risk, what they first think about is that, hey, you know what if I fail this exam? What happens to me then? They will get very scared. They will start thinking about things in a negative fashion. They will start thinking about the outcomes or the results. They will not focus on the process. They will not assess why will I fail in this exam in the first place. If you have clear answers, then you would not even prepare for that exam. But we never do risk assessment. We just think about the outcome. So just to quickly conclude today's video, so we spoke about 5 points that rich people own nothing, but they control everything. Number 2, they spend very less. Number 3, they invest a lot and they enjoy investing. Number 4, they use debt very, very intelligently. And number 5, they know how to take calculated risks. If you enjoyed this video, please press the like button. That would mean a lot to me, and I will see you the next time. Thank you so much.